don't mind letting me know, that would be. Okay, good morning. This is how to use ROSIE, the gold algo that we're developing. I see we have a few new names in the roster this morning. This video will be available to our members. We'll be sending them out later today. So this one is specifically toward a algorithm we're developing, 106. The name is ROSIE the algo. So what I'm going to do is I'm going to also open up in here in Discord, our Discord app. Now, if you're not a member of that or signed on to it, it's free. You can go to my Twitter feed. It's Kurt Melanopoly, melon like the melon, and then opoly like melanopoly. I mean like monopoly. So Kurt Melanopoly. Discord is right here. And then once you're in the Discord channel, there's various channels. There's text channels, voice channels. I have my headphones on to be able to hear you in the day trading channel if you want to ask any voice questions, or you can simply type your questions into the text box in this webinar. So I'm basically functioning in two right now. Okay, so what I'm going to do, actually I'm just getting a DM here from one of our members. I think having a hard time getting into the room. Hold on 2 seconds. I think she's going to be okay. She's on her way in. Okay. She can always catch the video after too. So to explain ROSIE, the gold algo development, what I'm going to do is I'm going to first give you a bit of a background on Epic. The reason being is that today ROSIE's the gold algorithm's charting, which looks like this currently, that's the gold, and looks like this currently, that's the GDX. They are both getting further upgrades to look like this. This is the oil algorithm. So first what I'm going to do is show you around a little bit just to make sure everybody knows what we're doing. And then I'm going to show you how Epic, the oil algorithm, which is further along in development, which is ready for coding and has proven itself to be extremely effective. And then you'll know what kind of a revision this charting for gold and GDX are going through today. Now, I opted not to show the new revisions, and our members will get the new revisions tonight, and they can send me emails with any questions on the revisions that they get, or I can even meet them, anytime today or tonight in Discord after the revisions go out to members. But specific to gold and GDX and the indications for trade under the new updates and algorithm, we opted not to just put that out to the public to respect our members, and those updates will go to our members today. Today's webinar is specifically to explain how it works, how the development process works, how the actual algorithm itself works, the specifics of indications of trade for short term, near term. We're going to leave those indications specific to our membership, and when they can talk to me on a personal basis, I can meet them in Discord later today, or you can email questions and that kind of thing. So that's basically the setup for today. So updates will be going out to members before the markets open tonight, for gold and for oil, by the way. So just a real quick background, the company is Compound Trading. The website is compoundtrading.com. Our basic platform is that we have a day trading platform. We have a swing trading platform that's in newsletter form. Day trading is in newsletter form and in a day trading chat room with charting, etc. And then we have an investment pool side where we execute trades for an investment pool. And then we are building algorithms, and the way that we build our algorithms is explained on our website at, if you hover over about and algorithm development process, it'll take you to this page here. The basic premise is that we're charting right now to the point that you see here with Epic, and then it goes to coding, and then after coding it goes to assisted intelligent assistant. So IA instead of AI, intelligent assistant. If you need to know what that is, you can Google it. But an intelligent assistant is basically this chart. That's an algorithm model that ends up getting coded to help traders execute trades. These are not high frequency algorithms, so this isn't about high frequency trade, although we are going there eventually on a whole other platform. This is algorithmic modeling in its early stage, development stage, that's being tested by traders in the marketplace, live, all documented, scientifically back tested, and then once it's proven out, it goes to its coding phase, and that's where it is right now. So you find that information on our website, so compoundtrading.com. We explain everything that we're doing. Our mission statement is basically to disrupt Wall Street, democratizing algorithm models for the everyday investor. Now, I will be very clear to say that we're a little early. Us and other groups that are out there are developing them and working toward them and getting them to market. We estimate about 6 years before it's commonplace. Right now, if you snoop around and you see algorithms, say like, for example, Python developed HFT algorithms, that's not what we're doing. What we're doing is more like, so this is, you go to About, Algorithm Development Process, click on here, that's a TED Talk, and this explains in general terms the discipline that we use for building these. So these are not Python generated high frequency algorithms. These are algorithmic models, which is they're both models, but disciplines are completely different. So our intention and purpose behind what we're doing goes beyond just a simple day trading room or swing trading newsletters or an investment pool. It goes into algorithmic modeling, and eventually the purpose is to democratize it, which means propagating it to the everyday retail investor. Right now, algorithms in this discipline are not available to the retail investor. The retail investor, I have to admit, is a little slower than the institutional investor in picking up these models, and whether or not retail will ever pick it up in a way that will support its development, we don't know. We have members on both sides, so we're just continuing the development process. The other place to find information is an example would be you hover over blog, go to algorithmic charting reports, and what we do is we open up, unlock historical charting. So this is Epic, the oil algorithm. This is a standard newsletter that goes out to members, and this is one of the reports that's unlocked from May 30th. Now we're at July 23rd, So we don't, we don't open them quickly because, of course, there's indications in trade that we have to respect with our members. The other place to find information about our services is the subscription menu. This is the overview and features, and these are all the different platforms and things that we do. So everything from live day trading to our trading rooms, the algorithms, and all the different pricing, which, by the way, there's a significant price increase on all of it coming in the next few days, announced for September 1, I believe. Yeah, for September 1. That's the one unfortunate thing about retail being slow on the uptake, is that it costs money to develop these, and consistently the prices have gone up, and that escalation of pricing will continue to a much greater degree between now and January 1st. By January 1st of next year, I would estimate that most retail traders, it'll be beyond reach for them. But that's, that's up to retail to pick it up or not. So that's basically what's happening there. Oh, and then our pricing, the way that it works is our early adopters or any adopter, we don't increase the price on that. It stays the same. It's new subscribers. So that's the website. There's also a YouTube channel where we just dump a lot of raw video. None of it's polished or Hollywood style. It's all raw video. So if you have lots of patience and you really want to dig into what we do and how we do it, that's where you do it. But I will warn you, for the third time, I think, in 3 sentences, it's very raw. Then we have our Discord channel. That's a free platform, of course, for people to meet in. So what I'm going to do is I'm going to first explain where Epic's at and how it's used, because it'll be, identical with a couple very small exceptions. So our gold algorithm is almost at the end of its development. So it's going to look like this tonight. So how it works basically, and the easiest way to follow along is you go to the website, you hover over blog, you go to algorithmic charting reports, and you click on Epic. Once you get there, you scroll down, because there's a few reports that are locked, of course, and you get to the May 30th. And on each report, how it works and how ROSIE's, the gold algorithm report this evening we'll read for members, is there's a list of ways to trade the algorithm. So here's an example. So this is Epic's most predictable trade is a significant resistance cluster overhead. Now, if you go to Epic's charting, you won't see that most predictable way. The reason being is it's a fair bit overhead. But if you go back in Epic's reports, you'll see that we were very clear with our members about it. And of course, it worked very well. So there's resistance clusters that we track. The next most predictable trade, wide trading range, primary resistance and support. So it tells our members exactly, $50.98 is where the gray arrow is, and lower resistance $47.50 where the gray arrow is. Now what that means is there is on the chart thick gray line, and you're going to start to notice these on ROSIE's algorithm. They're gray. There's a gray one here with a gray arrow. There's a gray line here with a gray arrow, gray line here, and a gray line here. Those are trading ranges. Those are algorithmic model trading ranges. So when you look at this chart, this is a 30-minute chart and it's blowing up. So this line is fairly thick. If you look at ROSIE's, for example, it's a 60-minute, so it's not as concentrated, or the time frame's different, right? So these gray lines don't look as thick, but they are. So as the new charting comes out tonight, you'll see that represented. Those gray lines are very important. What they are is an algorithmic model trading range. So what I mean by that is right here on this chart, this is the upper part of the range. Let's go back to that report real quick here. Now, this report talks about a different range than what's on this chart. This is a more recent chart than that report represents, but nonetheless, the resistance area was right around 47.50. Now these ranges, these wider ranges, you've got to give them about 20-cent variance because they're wide. You know, what we do is we publish a range for our members that current trade is going to function in, and that's all of this is published in advance. By the way, this isn't charting that gets done during or after the fact. It's in advance, so it's like a GPS. So it's all trading ranges for our traders to function inside of. So basically, what that means is our traders knew at this time my range is 50.98 on the high side, 47.50 on the low side, and they could confidently take those trades. Now we have technicians for our investment pool that take these trades consistently, and they consistently work, and they're functioning at a return of about 50% every 3 months. Those are very predictable, and if they don't work, then of course they exit the trade, but it's done quickly. So any losses are very small, gains are very large, trading in a wide range. In this particular instance with oil recently, trade got just up over it, and that's very typical because you get your overextensions, right? The market always overextends to the upside or the downside. But this gray line here was on this chart for many weeks for our traders, for our oil traders. So, and recent trade, so the date of this is, you can see the dates down here, right? So this is July 20th, so 3 days ago. Our traders knew, all of our oil traders knew, okay, oil's now getting to a significant resistance area. And of course, many of our traders did very well in this downturn, and it went fast. I was sick, so unfortunately, I had my first sick day in, I think, 3 years. I missed that, but many of our traders caught it. Okay, so those are wide trading ranges, and then there's also, now you won't find those on conventional charting. That's totally 100% algorithmic modeling. Next, most predictable range, support and resistance of channels. So these channels you'll find on Epix charting, and you'll find them on the gold charting as of this evening. So this is the upper part of the channel. This is the lower part of the channel. Now, and this is the mid part of the channel. So you can picture a runway, that'd be the middle of it. We produce this, all of this in advance, and as I mentioned, and conventional charting will fill in channels as trade happens or after it happens. So our traders know in advance very clearly where their channels are. So you can see how a trade comes up to the top of the channel and then it works its way down. Now it doesn't always get to back to the bottom of the channel, but at least they know the width, right? So here's an example of an area where our, this is the downward channel, by the way, and then it goes up here. This is an area where a lot of our traders did very well because they knew they were getting to the bottom of this channel. They were at the bottom here, and it's hard to explain in short, but once it gets to the inverted apex in this area where the channels meet, that's a turnaround area. So of course long in here, and away they went. There are a lot of videos now on our YouTube channel that explain how these work. So if they're not making, if this isn't making sense, and I'll open it up to questions right away, or near the end here before the top of the hour. But basically that's how it works. There's channels that operate as support and resistance. So you can see how once it got up to its resistance for the wide trading range, like it worked its way through the channel, got up to resistance, it came off. Our traders already knew there's a 93, it's basically a 93% chance that it's going to fail up here, and it's not only going to fail there, but because it just hit resistance, it's now returning or going to break the upward channel, which it did, and it gets vicious when that happens. So once it gets to its support or resistance of its wide algorithmic model trading range, now things get very vicious. And you can see in oil trade here over the last day or two how vicious it gets and how good the trades get when it gets to its resistance or support. How does that benefit our traders? Of course, our traders are now ready for the big ranges. And I even, actually, if you go to my personal Twitter feed, I told everybody in advance exactly, well, exactly is a bit extreme, but I told the world what was happening without contravening my agreements with our institutional investors that use this model. So the next most predictable trade is support resistance channels. So I explained that. Next most predictable trade, support resistance of 30-minute quadrants, and Fibonacci support resistance. Really, these are two different things. So there's quadrants and there's Fibonacci support resistance. So if you look at this charting, you're going to find that there's what we call quadrants. So I had explained how this is a channel. This is the bottom of the channel. This is the top of the channel. And this is the mid part of the channel. If you look at it from a different perspective, and you look at it as a baseball diamond, so this being third base, home, first base, and second base, this is a 30-minute chart. That's one quadrant based on the 30-minute chart of FXAUUSD WTI. Inside of that, there's four quadrants. One on the left side, one on the right, one here, and one here. Those quadrants, all of those diagonal lines act as support and resistance. Now, you can see how a trade comes up and it overshoots all the time. Well, not all the time, but a lot of the time. So, remember, these charts, I can tell you 6 days, 6 months, 6 weeks in advance where all of this is. This is a model, a GPS, like a roadmap, right? And all trade does is go in between. So in between each one of these lines is a support and resistance decision. Now, a lot of traders will say, okay, so how does that help me? Well, it helps you on the intraday as far as quadrants are concerned. But if you back up to what I said, where I was explaining the most predictable trades, what we're doing here is we're explaining from widest frame down to tight, the tightest time frames. So it depends on what the trader's doing. These quadrants, we can bring down the time frames to 1 minute if we have to, because these quadrants are available on the 1, 3, 5, 15, 30, 1 hour, etc., time frames. To explain how this charting came to be and how we figured it out, just go to the YouTube channel and view the videos on how, anything that we've published about Epic, the whale algorithm. Our website, by the way, also explains exactly what happened and how Epic came to be. Okay, so that's the quadrants. The Fibonacci support and resistance, these are conventional Fibonacci lines. So these horizontal lines that you see on the charting, they're all conventional except for those purple and yellow. They're a different breed, but all of these horizontal lines are all Fibonacci lines. It's just that they're represented, the thicker they are, the more important they are on the charting. So that's another way that our traders use, and you can see how trade was using inside of this quadrant these Fibonacci lines, and you'll find that they're very, very accurate and predictable. The purple ones are previous support and resistance that have proven out time and time again. And last trade signal we use are the time and price targets. Now, these are more, you know, I don't really want to say for fun, but they are in a way, than they are, you know, scientific. So we produce 2 targets for Tuesday at 4:30, Tuesday or Wednesday at 10:30, and Friday at 1 o'clock. So where you see these vertical lines and these round circles. So last Tuesday, it just got to the edge of the target. Well, it actually got into the target here in that candle there. And then Wednesday just about hit right to the middle of the target. And you can see the times down at the bottom here. So that's Tuesday at 4:30, Wednesday at 10:30. And these are produced for our traders in advance. And then here's Fridays here. This is interesting. Fridays are less predictable than Tuesday and Wednesdays. So, you know, it wasn't unusual for trade to start going up to the target and then fail. Especially that the main resistance was here. So we didn't expect it to hit there. But it's good to know as a trader where that target is, because, you know, then the trader knows, generally speaking, where is trade going. What was most interesting about this, though, is that when oil fell off, and it fell off in fantastic style, 2.73%, the most interesting thing is the second target, because there's 2 produced for that day on Friday. If you go way down here, there's the second target for Friday. So that's the power of Epic right there in a nutshell. Now, keep in mind that those targets are not how we recommend our traders to trade, but they're definitely a fun add-on. The reason why we don't recommend our traders trade them, most of the time, the majority of the time, is that it's very, it's not as a predictable science or as disciplined as the model. So what we do is we tell our traders what the probabilities are like. They do become very predictable when there's a significant uptrend or downtrend in oil for a period of time, but that hasn't been the case in the last 4 or 5 months. So that's how it relates to the gold chart now, or where the gold charting is going as of today. Up until now, the gold charting is more conventional. So these quadrants, you know, a lot of retail traders wouldn't know how to set these up, but these are more conventional than on our oil charting. On our gold charting, there's wide ranges, trading ranges, these gray lines. So you can see, you know, when trade breached this gray line here, how volatile trade got. I mean, that was an extreme lift, and then it got up into this next range, and it kind of settled in. And it came off a little bit, but it back tested to the range, comes up. So once it gets up and over one of these gray, or down and under one of these gray resistance and support lines, you can be fairly confident that it's going to stay in that range, especially after it's come through and gone through the quadrant. See that diagonal wall? That's a quadrant support and resistance. So in other words, how to trade this is when it loses here, loses its support, it now becomes resistance. But don't consider it gone and going south in a new trend until it's gotten outside of this quadrant. That just confirms it, you know. And then of course here's another test of the trading range. Well, you can see how it bounced off it here. So it back tested, bounced off here, and you can see how volatile trade got when it did that. Gets into the new quadrant, trades around, fools around the resistance and support, and then boom, as it goes through the quadrant wall, very, very volatile, and up, and does the same thing. Back tests, works its way through the quadrant, gets through the quadrant wall, volatile, and up against the quadrant wall here, overextends a little bit, and then comes back off, and same thing in here. So as soon as it got up over, say, for example, we can do it all the way from here, and it bounced. It doesn't become a predictable long until it gets into this next quadrant. Gets up and over, bounces, becomes a predictable long when it gets through the next quadrant. And the same works to the south side. So this is the premise of charting that Epic started on, right? It's the same thing. It's just that Epic has its channels, clear channels, and some targets. So it's got a few things that this charting doesn't have. But this is essentially the same kind of charting. It's just that those channels aren't there. The GDX chart, I know it's hard to see the actual trade in here, but you know, this is a 60-minute, and these are its quadrants. So you can see how trade uses the quadrants as support and resistance as it comes through. So it's all about using your support and resistance of these Fibonacci lines and the support and resistance of your diagonal quadrants, or the quadrants that you're in, learning how to trade them. Or oil traders know very specifically, like if you look at my Twitter feed, a few days ago I was kind of antagonizing people in Twitter land because I was telling them exactly when, you know, the volatility was going to come, because we know when it enters and it leaves these quadrants, it's volatile, or at certain points of the quadrant it's volatile, or when it leaves these channels it gets volatile, and we know the nature of that trade, but you've got to trade it for a while before you understand that. But you can see that here. So it gets up over support, you know, especially when it gets through these quadrant walls and it's tested support. So this is very predictable long trading in here. It doesn't become a short until it fails one of these gray lines and fails out of the quadrant. Then it's a predictable short. So right now it's all a predictable long all the way through here in gold. And that's all I can really tell you specific to current trade. These blue lines here, what these are is wider range time frame quadrant walls, support resistance, and the yellow are algorithmic model support and resistance wider range, which makes them more important than the gray ones, but they're just for consideration. Your focus in trade is really these gray ones day to day, and these quadrants themselves. Now this is the 60-minute, and over time we're going to bring these time frames down for our gold traders, so they're tighter and tighter, so that they can use very tight intraday, or they can go back to their 60-minute. But that's the essence of how it's traded. It makes it a lot simpler than using conventional chart. Well, gold and oil, they don't function on conventional charting. It's just that simple. If you try and trade gold and oil on moving averages and other conventional means, it's very difficult. This is very simple. Okay, it got into the next quadrant, it's up and over a support, that means it's a long, and you stay long until it fails out of the quadrant and down below the next gray. Okay, it's failed out of the quadrant, it's failed the gray, to the south side it's a short. And that method, you'll return profits all day long with gold. The return on that is in between 100 to 300% a year if you back test it. I can't give you the exact number because I can't represent that under law, but I can tell you right now that if you back test it on your own, you'll find that the returns are exceptional. Same thing works with the miners. Now, you don't have those gray lines on the miners yet, but they are coming. It's a little behind the gold model, but you do have the actual quadrants. It's a little different. It'll be behind the gold in terms of development. So gold, what it's getting next are the channels and the targets, and after that, it's near identical to oil and Epic's charting. So that's how you use it. That's what we're doing as a company. You know where to find information on us. Rosie, the gold algorithm, is on Twitter, Rosie the Algo. So is Epic the Algo. All of our algorithms are. My personal Twitter is here. Of course, Compound Trading is Compound Trading. Our website, compoundtrading.com, and our free Discord channel. You can just go to my feed, click on here for the free Discord channel. Our YouTube channel, you can just Google Compound Trading YouTube, or you can go to my personal Twitter feed, and it's right here, that tiny URL. And our subscriptions are on our website right here under subscription menu and what everything costs. And our algorithmic development process is here on the website under About, algorithmic development process, and our historical reports that we've released are here. So I'm going to take any questions if there are any. We have about 10 minutes or so. I got to get set up for the next webinar. Wow, no questions. Interesting. Fantastic. Means I must have done my job. Or I've confused everybody, one of the two. Okay, well, if we're not going to get any questions, I'm going to close out the webinar, and I'm going to get ready for our next one. Thanks for coming. Appreciate it. You guys have a great day.